Welcome to the PCAOB presentation, Auditor's Use of the Work of Specialists, presented by Lisa Calandrillo and Nicholas Jenner. Before we get into the details, I'd like to remind everyone that the views expressed by the presenters are their own personal views and not necessarily those of the PCAOB, members of the board, or the PCAOB staff. Here's our agenda for today. You see, we will cover important aspects of the amended requirements for using the work of specialists in an audit. That said, let's get started with the auditor's use of the work of specialists. On July 1st, 2019, the SEC approved the PCAOB's project for the auditor's use of the work of specialists. At the same time, the SEC approved the amendments for auditing accounting estimates, including fair value measurements. The amendments are effective for audits of financial statements for fiscal years ending on or after December 15th, 2020. That includes audits of December 31st, 2020 calendar year-end companies and broker-dealers. As you can see on the slide, and we'll discuss in more detail later, the Specialist Project amended the audit evidence, supervision, and use of the work of specialist standards. For a complete list of the amended standards, participants can refer to the adopting release, a link to which was included in the course materials you received. At the end of our presentation, as part of the resources, we'll show you how to access the amended standards on the PCAOB's website. Before we go over the new requirements, let's go over the types of specialists that the new requirements apply to. I'd like to emphasize here that the new requirements didn't change how the term specialist is used in PCAOB standards. So let's begin there. A specialist is a person or firm possessing special skill or knowledge in a particular field other than accounting or auditing. Under both the existing and the amended standards, persons or firms with specialized skill or knowledge in information technology or income taxes are not specialists, as both are specialized areas of accounting and auditing. IT remains an area inside accounting and auditing, because to the extent that IT is used in information systems, auditors still need to maintain sufficient technical knowledge to identify and assess risks and design procedures to respond to those risks and evaluate the audit evidence obtained. With respect to income taxes, accounting for income taxes remains an area of accounting and auditing, while specialized areas of income tax law may involve the use of legal specialists. Examples of some areas where an auditor or company might choose to use a specialist include valuation, such as fair value measurements, intangible assets, goodwill impairment, environmental remediation contingencies, legal interpretations, such as legal title to property, an evaluation of physical and other characteristics, such as oil and gas reserves. As you can see from the examples, specialists include a company's attorney when the attorney is providing, for example, a legal interpretation regarding a contractual provision or a legal opinion on the isolation of transferred financial assets, and the interpretation or opinion is necessary to determine the appropriate accounting or disclosure under the applicable financial reporting framework. However, when a company's attorney provides information used by the auditor concerning litigation, claims, or assessments, auditors should continue to look to the requirements in AS 2505, inquiry of a client's lawyer concerning litigation, claims, and assessments, as opposed to the requirements related to using the work of a company specialist. that standard continues to apply in those situations. Now, a company specialist is a specialist employed or engaged by the company whose work auditors often use as audit evidence. A company specialist often performs work that the company uses in preparing its financial statements. An auditor specialist is a specialist employed or engaged by the auditor who may assist auditors in, among other things, obtaining or evaluating audit evidence with respect to a relevant assertion of a significant account or disclosure. The auditor specialist helps the auditor to obtain the necessary audit evidence to support the audit opinion. This diagram is a visual representation of what we just discussed. As you can see, the company specialist, specialist A and B, is employed or engaged by the company to perform work that the company uses in preparing its financial statements, which the auditor may use as audit evidence with respect to auditing significant accounts and disclosures. In comparison, the auditor specialist, specialist C and D, performs work to assist the auditor in obtaining and evaluating audit evidence with respect to a relevant assertion of a significant account or disclosure. Here, we can see visually the standards in place for audits before the effective date of the new requirements and for audits of financial statements with fiscal years ending on or after December 15th, 2020. As you'll notice on the next slides, there are now different requirements when an auditor uses the work of a company specialist and an auditor engaged specialist. You can also see that we've added an appendix to AS 1201 to supplement the supervision requirements in the current standard on the auditor's supervision of the engagement team. A few highlights of the new requirements. As mentioned before, the requirements for using the work of a company specialist and an auditor engaged specialist are no longer the same. The objectives and purpose of the work of these specialists are different, and the new requirements are more closely aligned with those objectives and purpose. Also, you'll see that the requirements for using the work of an auditor employed and an auditor engaged specialist are mostly parallel. The key difference in requirements is the assessment of qualifications and relationships to the company, that is, objectivity versus independence. Auditor employed specialists are members of the engagement team, so they must be independent and are assigned tasks commensurate with the auditor employed specialist qualifications, like other members of the engagement team. Auditors will assess knowledge, skill, ability, and degree of objectivity for the auditor engaged specialist. We'll talk about the requirements for using the work of each of these specialists as we move on. Before we start diving into the requirements for using the work of specialists, let's talk about planning an audit and what the auditor needs to do when thinking about how specialists are involved. Nick?
Thanks, Lisa. Beginning with planning considerations and understanding the work of the company specialists, it's important to discuss that there's a new requirement, and this requirement includes, as part of the auditor's risk assessment procedures, to obtain an understanding of the work and reports of the company specialists and related company processes and controls. This requirement is now in AS 2110, identifying and assessing risks of material misstatement, and part of obtaining the broader understanding of internal controls over financial reporting. This procedure is important because it informs the evaluation of the work of the company specialists in addition to the assessment of their relationship with the company. When obtaining this understanding, the auditor may not know exactly the form the company specialist report will take, but the auditor can understand what the company specialist plans to provide or has committed to providing the company. Auditors will also want to use what is learned here to understand the interaction of the specialist's work and the company's related processes and controls. The auditor will obtain an understanding of controls for using the work of specialists that are relevant to the audit, including evaluating the design of those controls and determining whether those controls have been implemented. The interaction of the specialist's work and the company's processes should be considered when assessing and responding to risk in the related accounts and disclosures, especially when the specialist's work is significant to the auditor's conclusion regarding the relevant assertion and the accounts or disclosures have higher risk. Keep in mind that the understanding of the company's specialist work can also help inform the determination of the auditor's own needs for an auditor's specialist. Moving on to determining the need for specialized skill and knowledge. As a reminder, the Audit Planning Standard, AS 2101, requires you to determine whether specialized skill or knowledge is needed to perform appropriate risk assessments, plan or perform audit procedures, or evaluate audit results. This requirement resides in paragraph 16 of AS 2101. This requirement includes individuals knowledgeable about accounting and auditing, as well as specialists. Continuing on with specialized skill and knowledge. If a person with specialized skill or knowledge employed or engaged by the auditor participates in the auditor should have sufficient knowledge of the subject matter to enable the auditor to communicate the objective of that person's work, determine whether that person's procedures meet your objectives, and evaluate the results of that person's procedures as they relate to the nature, timing, and extent of other planned procedures and the effects on the auditor's report. This resides in paragraph 17 of AS 2101. If the auditor determines that a person with specialized skill or knowledge in a field outside of accounting and auditing is needed, the auditor will apply the requirements we discussed today, which were designed to, in the case of an auditor-employed specialist, provide more specific direction on applying the general supervisory principles in AS 1201 to the supervision of auditor-employed specialists who assist the auditor in obtaining or evaluating audit evidence, and in the case of an auditor-engaged specialist, help the auditor determine whether the work of the auditor-engaged specialist is suitable for the auditor's purpose and supports the auditor's conclusion regarding the relevant assertion. For those cases where auditors involve someone who has specialized skill in areas of accounting and audit, such as IT and tax, auditors supervise those individuals pursuant to the extant AS 1201 Supervision of the Audit Engagement Standard. We've walked through how the term specialist is used in PCAOB standards, the general changes in the requirements, and planning considerations. Now, let's do a deeper dive into the basic requirements, starting with using the work of a company specialist as audit evidence. Lisa, I'll hand it back over to you.
Thanks, Nick. Here's an overview of those requirements. Auditors have responsibilities for assessing the knowledge, skill, and ability of the company specialist and the specialist's relationship to the company, and for evaluating the work of a company specialist, which involves evaluating the data, significant assumptions, and methods used by the specialist, and the relevance and reliability of the specialist's work and its relationship to the relevant assertion. Now we begin to break each of those down. Similar to the extant requirements, auditors will assess the professional qualifications and KSA of the company specialist in the particular field. Unlike the existing requirements, auditors will be assessing the professional qualifications of both the company specialist in the particular field and the entity that employs the specialist, if other than the company. The amended requirements generally provide the same factors as the extant standard for the auditor's assessment of the specialist's KSA, and does not set forth specific steps to perform in assessing the specialist's KSA. The adopting release and staff guidance list examples of potential sources of information that, if available, could be relevant to the auditor's evaluation. Examples of those potential sources of information for the auditor's assessment of KSA include information contained within the audit firm related to the professional qualifications and reputation of the specialist or the entity that employs the specialist in the relevant field, and experience with previous work of that specialist. Professional or industry associations and organizations. Discussions with the specialist through the company about matters such as the specialist's understanding of the financial reporting framework, the specialist's experience in performing similar work, and the methods and assumptions used in the specialist's work the auditor plans to evaluate. Other examples include information obtained as part of audit planning when obtaining an understanding of the company's processes and identifying controls for testing. Information included in the specialist's report about the specialist's professional qualifications. Responses to questionnaires provided to the specialist regarding the specialist's professional credentials. Published books or papers written by the specialist, and requirements applicable to the specialist pursuant to legislation or regulation. It's important to remember that some sources of information provide more persuasive evidence than others. For example, relevant information from a source not affiliated with the company or specialist, multiple sources, or the auditor's experience with previous work of the specialist generally would provide more persuasive evidence than the specialist's uncorroborated representation about his or her professional credentials. The facts and circumstances will drive how persuasive the evidence needs to be. Now, moving on to assessing relationships to the company. Similar to existing requirements, auditors have an obligation to assess the relationship that the specialist has to the company. That is, to assess whether the company has the ability to significantly affect the specialist's judgments about the work performed, conclusions, or findings. As with the assessment of KSA, if the company's specialist is engaged rather than employed by the company, then the auditor assesses the relationship of the company to the entity that employs the specialist, as well as the relationship of the company to the individual specialist. Appendix A of AS 1105 does not prescribe specific steps to perform in assessing the specialist's relationship to the company, recognizing that there are various ways to comply. However, a note to paragraph A4 in the standard includes examples of potential sources of information that could be relevant to the auditor's assessment. The note in the standard includes the following: information obtained by the auditor from procedures performed pursuant to AS 2410 related parties, engagement contracts between the company and the specialist or the specialist's employer, responses to questionnaires provided to the specialist regarding relationships between the specialist or the specialist's employer and the company, information provided by the employer of a specialist regarding relationships with the company, and disclosures about relationships with the company in the specialist report or equivalent communication. Auditors also want to keep in mind that a company's ability to significantly affect the specialist's judgments may vary, and the requirement provides a spectrum for evaluating this. The relationship the specialist has to the company, employed versus engaged, is one circumstance that could indicate the company's ability to influence the specialist. Other circumstances that give the company the ability to significantly affect the specialist's judgments could include the reporting relationship of a company-employed specialist within the company, compensation of a company's specialist based on the outcome of work performed, relationships of a company-engaged specialist with entities acting as an agent of the company, personal relationships, including family relationships between the company's specialist and others within company management, financial interests, including stock holdings of company specialists in the company, and ownership, business relationships, or other financial interests of a company engaged specialist's employer with respect to the company. Now that we've walked through the requirements to assess KSA and the specialist's relationships to the company, let's talk about the necessary evidence auditors will need to obtain with respect to the procedures for assessing KSA of the company specialist and the company specialist's relationship to the company. The necessary evidence to assess the level of KSA of the company specialist and the specialist's relationship to the company depend on the significance of the specialist's work to the auditor's conclusion regarding the relevant assertion, and the risk of material misstatement to the relevant assertion. That said, as the significance of specialist work and the risk of material misstatement increases, the persuasiveness of evidence should also increase. For example, relevant information from a source not affiliated with the company or specialist, multiple sources, or the auditor's experience with previous work of the specialist generally provide more persuasive evidence than the specialist's uncorroborated representations about his or her professional credentials. Additionally, the reliability and thus persuasiveness of information about the specialist's credentials and experience increases when the company has effective controls with respect to that information, such as controls involving verification of specialist credentials in conjunction with the selection of qualified specialists. Remember though, the auditor should obtain more persuasive audit evidence from tests of controls the greater the reliance the auditor will place on the effectiveness of a control. Also, with respect to scalability of these requirements, not only should auditors think about scaling procedures down in response to risk, but more importantly, auditors may need to scale procedures up for areas of higher risk.
Moving on to our next slide, evaluating the work of the company specialist. The auditor's responsibility is to evaluate whether the specialist's work provides sufficient, appropriate evidence to support a conclusion regarding whether the corresponding accounts or disclosures in the financial statements are in conformity with the applicable financial reporting framework. Auditors are not required to re-perform the specialist's work or evaluate whether the work complies with all technical aspects in the specialist's field. Over the next few slides, we'll go over each element of evaluating the work of the company specialist. Determining the necessary audit effort for evaluating the specialist's work. Factors to consider in determining the extent of the auditor's evaluation of the specialist's work to support a conclusion on the relevant assertion are significance of the specialist's work to the auditor's conclusion regarding the relevant assertion, risk of material misstatement of the relevant assertion, the specialist's KSA, and ability of the company to significantly affect the specialist's judgments about the work performed, conclusions, or findings. These four factors help auditors determine the extent of their evaluation of the work of the company specialist and drive the persuasiveness of the evidence needed from the specialist's work. The first two factors, in combination, relate to the persuasiveness of the evidence needed from the work of the company specialist. The other two factors, the specialist's level of KSA and the ability of the company to significantly affect the specialist's judgments, relate to the degree of reliability of the specialist's work as audit evidence. That said, more persuasive evidence is needed as the significance of the specialist's work, the risk of material misstatement, or the ability of the company to affect the specialist's judgment increases, or the level of knowledge, skill, and ability possessed by the specialist decreases. Said another way, the required audit effort when evaluating the work of the company specialist would be greatest when the risk of material misstatement is high. The specialist's work is critical to the auditor's conclusion. The specialist has a lower level of KSA in the particular field, and the company has the ability to significantly affect the specialist's judgments. Please note, auditors are not precluded from pursuing alternatives other than using the company specialist work to obtain audit evidence about a significant account or disclosure. For example, if an auditor has doubt about the specialist's KSA or about the company's effect on the specialist's judgments, the auditor will ordinarily need to either perform additional procedures to evaluate the specialist's work or choose not to use the work of the specialist. An alternative might involve using an auditor specialist to assist in developing an independent expectation of the related accounting estimate. And remember, as we said earlier, that with respect to scalability of these requirements, not only should auditors think about scaling procedures down in response to risk, but more importantly, auditors may also need to scale procedures up for areas of higher risk. While we are discussing the factors to consider in determining the necessary audit effort for evaluating the work of a company specialist, let's talk about when auditors would likely gather that information. Auditors would likely gather much of the information needed to determine the necessary audit effort for evaluating the specialist's work in the earlier stages of the audit, such as when the auditors are obtaining an understanding of the company, identifying and assessing risks of material misstatement, and obtaining an understanding of the control environment. However, auditors might learn something while performing audit procedures that could also inform or change a determination. Remember that the assessment of the risks of material misstatement, including fraud risks, should continue throughout the audit. When an auditor obtains audit evidence during the course of the audit that contradicts the evidence on which the auditor originally based the risk assessment, the auditor should revise the risk assessment and modify planned audit procedures or perform additional procedures in response to the revised risk assessments. This requirement resides in AS 2110, paragraph 74. So what does this mean in terms of using the work of a company specialist? Changes to the auditor's assessment of the risk of material misstatement of the relevant assertion or the significance of that specialist's work to the auditor's conclusion could cause an auditor to determine that more or less persuasive audit evidence is needed from the work of the company specialist. Moving on to evaluating data. The auditor should test the accuracy and completeness of company-produced data used by the specialist and evaluate the relevance and reliability of data from sources external to the company that are used by the specialist. The requirements emphasize that auditors have a responsibility to evaluate the data the specialist is using. Audit procedures will be based on the source of that information, similar to existing requirements in the Audit Evidence Standard. The procedures for testing the accuracy and completeness of company-produced data used by the specialist would likely be similar to procedures performed for other company-produced data to be used as audit evidence, as would the procedures for evaluating the relevance and reliability of data from sources external to the company. Further, these could be tested directly or by testing controls over the accuracy and completeness of the data. Evaluating significant assumptions. With respect to significant assumptions used by the specialist, auditors are required to evaluate whether those assumptions are reasonable. This includes the 3 steps on the slide, as you'll see. When taking into account the consistency of those assumptions with relevant information, auditors will take into account the relevant information such as assumptions generally accepted within the specialist's field, supporting information provided by the specialist, industry, regulatory, and other external factors, the company's objectives, strategies, and business risks, existing market information, historical or recent experience, and significant assumptions used in other estimates. When evaluating significant assumptions provided by company management, auditors are looking to the requirements in AS 2501, auditing accounting estimates, including fair value measurements. These include obtaining an understanding of how management analyzed the sensitivity of its significant assumptions to change based on other reasonable likely outcomes that would have a material effect on its financial condition or operating performance. Taking that understanding into account when evaluating the reasonableness of the significant assumptions and potential management bias. When a significant assumption is based on the company's intent and ability to carry out a particular course of action, auditors should take into account the following factors described in AS 2501 in evaluating the reasonableness of the assumption: the company's past history of carrying out its stated intentions, the company's written plans or other relevant documentation such as budgets or minutes of meetings, the company's stated reasons for choosing a particular course of action, and the company's ability to carry out a particular course of action. Moving on to evaluating methods. Auditors should evaluate whether the methods used by the specialist are appropriate under the circumstances, taking into account the requirement of the applicable financial reporting framework. If the applicable financial reporting framework allows more than one method, or if the appropriate method under the framework depends on the circumstances, evaluating conformity with the framework involves consideration of other relevant factors, such as the nature of the estimate and your understanding of the company and its environment. The evaluation of the specialist methods includes evaluating whether the data and significant assumptions are appropriately applied under the applicable financial reporting framework. Evaluating the application of the data includes, for example, whether the data is selected and, if applicable, adjusted in conformity with the requirements of the applicable financial reporting framework. Similarly, evaluating the application of significant assumptions includes evaluating whether the assumptions were selected in conformity with the requirements of the applicable financial reporting framework. We're not going to spend too much time on this slide, since we just went through all this content in detail on the previous slides. But this table summarizes the types or sources of data, significant assumptions, and methods a specialist may use and auditors' responsibilities with respect to each category. Moving on to evaluating the specialist's work, in particular the findings. The auditor should evaluate the relevance and reliability of the specialist's work and whether the specialist's findings support or contradict the relevant assertion. This requirement builds upon the extant requirement when evaluating the work of a company specialist and aligns the requirement with the risk assessment standards for evaluating the relevance and reliability of audit evidence. Specifically, auditors should be looking to the factors identified in Appendix A when evaluating the relevance and reliability of the specialist's work, which are results of the auditor's procedures over data, significant assumptions, and methods performed pursuant to paragraph A8, the nature of any restrictions, disclaimers, or limitations in the specialist's report or equivalent communication, and the consistency of the specialist's work with other evidence obtained by the auditor and the auditor's understanding of the company and its environment. But let's unpack each of these a bit, beginning with the results of the auditor's procedures over data, significant assumptions, and methods performed pursuant to paragraph A8. As this requirement states, this focuses the auditor on the results of the work performed that we discussed on the preceding slides. Moving on to the nature of any restrictions, disclaimers, or limitations in the specialist's report or equivalent communication. A specialist's report may contain restrictions, disclaimers, or limitations that affect how the auditor can use the report of the specialist. For example, a specialist's report states the values in this report are not an indication of the fair value of the underlying assets. Generally would not provide sufficient appropriate evidence related to fair value measurements. On the other hand, a specialist report that indicates that the specialist's calculations were based on information supplied by management may still be appropriate for use by the auditor to support the relevant assertion, since the auditor would already be required to test the company's supplied data used in the specialist's calculations. Finally, the consistency of the specialist's work with other evidence obtained by the auditor and the auditor's understanding of the company and its environment. This factor emphasizes the auditor's obligation to assess the consistency of the specialist's findings or conclusions with other evidence obtained by the auditor, as well as the auditor's understanding of the company and its environment. Evaluating the specialist's findings and continuing on, this requirement describes the auditor's obligation when the specialist's findings or conclusions appear to contradict the relevant assertion or the work doesn't provide sufficient evidence. In these situations, auditors should perform additional procedures to address the matter. Similar to the extant requirement in AS 1105 paragraph 29, the appendix doesn't prescribe specific procedures as these will be determined based on your facts and circumstances. The note to AS 1105 paragraph A10 includes examples of situations where additional procedures are ordinarily required. Those are: the specialist's findings and conclusions are inconsistent with 1. Information, if any, in the specialist's report or equivalent communication, 2. Other evidence obtained by the auditor, or 3. The auditor's understanding of the company and its environment. Moving on to the next consideration. The specialist's report or equivalent communication contains restrictions, disclaimers, or limitations regarding the auditor's use of the report or communication. Next consideration. Exceptions were identified in performing procedures described in paragraph A8 of AS 1105 related to data, significant assumptions, or methods. Next consideration. The auditor has doubt about the specialist's knowledge, skill, and ability, or about the company's effect on the specialist's judgments. And finally, the specialist has a conflict of interest relevant to the specialist's work. With that, I'm going to turn it back over to Lisa.
Thanks, Nick. Now let's start digging into how specialists assist auditors in obtaining or evaluating audit evidence. As we begin to discuss the new requirements for the auditor's supervision or use of the work of an auditor specialist, let's first review who these specialists are and where the respective requirements reside within the auditing standards. An auditor-employed specialist is employed by the auditor's firm and is a member of the engagement team. The same supervision requirements in AS 1201 apply to auditor-employed specialists as apply to other members of the engagement team. Appendix C of AS 1201 now provides specific requirements for supervising an auditor-employed specialist that supplement those general requirements. Now, as a reminder, the extant AS 1210 paragraph 5 states that the extant standard on using the work of specialist doesn't apply to situations in which a specialist employed by the auditor's firm participates in the audit. AS 1201, supervision of the audit engagement, applies in those situations and continues to do so today. An auditor-engaged specialist is engaged by the auditor's firm but is not a member of the engagement team. Requirements in AS 1210 apply when using the work of auditor-engaged specialists. Here's an overview of those requirements for using an auditor specialist. The auditor assesses the qualifications and independence of the auditor-employed specialist and the qualifications and objectivity of an auditor-engaged specialist. The auditor informs the auditor specialist of the work to be performed, which includes establishing and documenting an understanding with the specialist regarding the specialist's responsibilities and the nature of the work. The auditor also evaluates the work of the auditor specialist which includes reviewing the report or equivalent documentation and evaluating whether the specialist's work provides sufficient, appropriate audit evidence. Many of the requirements for using an auditor specialist, whether employed or engaged, are similar. The differences are generally limited to the assessment of the specialist's qualifications and the specialist's relationship to the company. That is, requirements to be independent versus objective. In addition, how much the auditor can leverage the firm's or network's quality control system to perform those assessments may differ from firm to firm. We'll touch more on this a little later as we discuss these particular procedures. Now we'll begin to break each of these down. Recall that the auditor-employed specialists are members of the engagement team. AS 1201, paragraph 6, requires the engagement partner and other engagement team members performing supervisory activities to take into account the knowledge, skill, and ability of each engagement team member. As members of the engagement team, auditor-employed specialists are then assigned work and supervised like other members of the engagement team. In doing so, the engagement partner or others with supervisory responsibilities take into account KSA. Although there are not specific requirements for how to do this, some of the considerations in assessing KSA of auditor-employed specialists are similar to those for auditor-engaged ones. And now, we will overview the requirements for auditor-engaged specialists. For auditor-engaged specialists, not members of the engagement team, auditors assess knowledge, skill, and ability of the specialist and the entity that employs the specialist. This assessment includes obtaining an understanding of the following with respect to the auditor-engaged specialist and the entity that employs the auditor-engaged specialist. Those are the professional certification, license, or professional accreditation in the particular field, experience in the type of work under consideration, including areas of specialty within the specialist field, and reputation and standing of a specialist in the particular field. Now let's consider sources of information that may be useful for assessing the knowledge, skill, and ability of an auditor-engaged specialist. These are similar to the factors we discussed earlier with respect to the company specialist. Examples of sources of information that could be relevant to this assessment can be found in the adopting release and in the August 2019 staff guidance. These include, among others, information the audit firm has related to the professional qualifications and reputation of the specialist and the entity that employs the specialist, if applicable, in the relevant field. Information that can be gathered from professional or industry associations and organizations. Information provided by the specialist about matters regarding the specialist's understanding of the financial reporting framework, experience in performing similar work, and the methods and assumptions used in the specialist's work the auditor plans to evaluate. The specialist's responses to questionnaires about their professional credentials, published books or papers written by the specialist, and requirements applicable to the specialist pursuant to legislation or regulation. Similar to our discussion of information used to assess the KSA of a company's specialist, certain sources of information that we described may provide more persuasive evidence than others. When more persuasive evidence is needed, it may be necessary to perform procedures to obtain evidence from multiple sources. Moving to assessing the relationships of the specialist to the company, independence and objectivity. Auditor-employed specialists, like other members of the engagement team, must be independent of the company that is the audit client. The requirements in PCAOB standards for determining compliance with independence and ethics requirements also apply to auditor-employed specialists. Information available from the firm's system of quality control can be used when assessing the auditor-employed specialist's independence. However, information available from a firm's system of quality control can vary, and practice may vary in monitoring compliance with independence requirements for firm personnel, including employed specialists. So the information provided by the system of QC may be some or all of the information needed for this assessment. But remember, even when information is available from the firm's system of QC, this does not relieve the engagement partner of his or her responsibility under AS 2101 paragraph 6 to determine whether the assigned specialist is in compliance with independence requirements for the particular audit engagement. Going on, auditor-engaged specialists' objectivity. Since auditor-engaged specialists are not employees of the firm and not members of the engagement team, the auditor assesses the specialist's degree of objectivity. That is the ability to exercise impartial judgment on all issues encompassed by the specialist's work related to the audit, as opposed to their independence from the audit client. Notice that we reserve the term objectivity to relate to the auditor-engaged specialist. The evidence necessary to assess the specialist's objectivity depends on the significance of the specialist's work and the related risk of material misstatement. The second note to paragraph 1210(5) provides examples of potential sources of information that could be relevant to the auditor's assessment of the specialist's objectivity. These include information obtained by the auditor from procedures performed pursuant to AS 2410 related parties, engagement contracts between the company and the specialist or the specialist employer, responses to questionnaires regarding relationships between the specialist or the specialist employer and the company, written representations or other information provided by the specialist concerning relationships with the company, and disclosures about relationships with the company in the specialist report or equivalent documentation. To note, certain sources of information that we described may provide more persuasive evidence than others. When more persuasive evidence is needed, it may be necessary to perform procedures to obtain evidence from multiple sources. Let's dig into objectivity a little bit more and a situation that auditors might face. The auditor may identify that the existence of a relationship between the company and the auditor-engaged specialist. The auditor may ask if they can use the auditor-engaged specialist when such relationship exists. The existence of a relationship between the company and the auditor-engaged specialist would not prevent an auditor from using the work of that specialist. However, the degree of objectivity affects the extent of any additional procedures to be performed. As the degree of objectivity increases, the evidence needed from additional procedures decreases. This slide includes the requirement in AS 1210 paragraph 11 addressing how the specialist's objectivity affects the nature and extent of the auditor's procedures. The necessary nature and extent of the additional procedures depend on the degree of objectivity of the specialist. If the specialist or the entity that employs the specialist has a relationship with the company that affects the specialist's objectivity, the auditor should perform additional procedures to evaluate the data, significant assumptions, and methods that the specialist is responsible for testing evaluating, or developing pursuant to the engagement team's understanding with the specialist, or should engage another specialist. If the specialist has a low degree of objectivity, the auditor should apply the procedures for evaluating the work of a company specialist. This concept of a low degree of objectivity should be familiar to auditors as it's used in paragraph 18 of AS 2201, an audit of internal control over financial reporting that is integrated with an audit of the financial statements.
Thanks, Lisa. Now moving on to informing the auditor specialists of the work to be performed. This step, which is informing the auditor specialists of the work to be performed, is a requirement for an auditor engaged specialist and an auditor employed specialist, and these requirements are aligned. The requirements for auditor employed specialists are in Appendix C of AS 1201, and those for auditor engaged specialists are in AS 1210. The engagement partner, and as applicable, others performing supervisory activities should inform the specialist of the work to be performed, which includes establishing and documenting an understanding with the specialist regarding the matters highlighted on the slide. This understanding includes the responsibilities of the specialist, including the objectives of the work to be performed, nature of the work the specialist will perform or assist in performing, the degree of responsibility of the specialist for testing data produced by the company or evaluating the relevance and reliability of data from sources external to the company, evaluating the significant assumptions used by the company or the company specialist, or developing his or her own assumptions, and evaluating the methods used by the company or the company specialist, or using his or her own methods. Also, there's responsibility to provide a report or equivalent documentation to the auditor describing the work performed, the results, and the findings or conclusions. This particular requirement should provide you with flexibility to obtain the necessary information about the specialist's procedures, findings, and conclusions through the specialist's report, other specialists provided documentation, or a combination of the two. As an aside, our outreach has indicated that a number of firms have employed a practice similar to this requirement. It will be important that, in those cases, firms are ensuring the new obligations are met and that the understanding is documented in writing. Auditors also have to communicate other matters that could affect the specialist's work, including, as applicable, information about the company and its environment, the company's process for developing the related accounting estimate, the company's use of specialists in developing the estimate, relevant requirements of the applicable financial reporting framework, and possible accounting and auditing issues. In addition, auditors should inform the auditor-employed specialist about the need to apply professional skepticism. The new requirements don't prescribe how auditors should document the understanding established with the specialist, only that it should be in writing. Auditors may document the understanding in, for example, planning memoranda, separate memoranda, other relevant work papers, or an engagement letter between the auditor and the auditor specialist. This approach should provide auditors with the flexibility while still requiring the documentation of the important aspects of the understanding reached by the auditor and the auditor specialist. This approach also enables the specialist to communicate those matters specific to the work performed and does not limit the specialist's ability to communicate other items to the auditor. Under the new requirements, auditors are also required to implement measures to determine that there is a proper coordination of the specialist's work with the work of the relevant engagement team members to achieve a proper evaluation of the evidence obtained in reaching a conclusion about the relevant assertion. This coordination includes implementing measures to comply with other applicable auditing standards as appropriate, including AS 2501 and Appendix A to AS 1105. For example, if the auditor specialist assists the auditor in developing an independent expectation using data, assumptions, or a model provided by the auditor or auditor specialist, the auditor would establish an understanding with the specialist regarding the specialist's responsibilities with respect to the data, assumptions, or model. Regardless of the specialist's degree of responsibility, the engagement partner and, as applicable, other engagement team members performing supervisory activities are responsible for evaluating the specialist's work and report or equivalent documentation. The necessary extent of supervision of an auditor-employed specialist or review of the work of an auditor-engaged specialist depends on the factors set forth on this slide. Those are risk of material misstatement of the relevant assertion, significance of the specialist's work to the financial statement assertion, and the KSA of the specialist. Broadly speaking, these factors are analogous to the factors in the supervision standard, specifically AS 1201 paragraph 6 for supervising members of an engagement team. Specifically, to determine the extent of supervision necessary for engagement team members to perform their work as directed and form appropriate conclusions, the engagement partner and other engagement team members performing supervisory activities should take into account 1. The nature of the company, including its size and complexity. 2. The nature of the assigned work for each engagement team member, including the procedures to be performed and the controls or accounts and disclosures to be tested. Also to be considered is the risks of material misstatement, and finally, the knowledge, skill, and ability of each engagement team member. When using an auditor-engaged specialist, auditors also consider the assessment of objectivity in determining if any additional procedures are necessary to enable the use of that specialist's work. This requirement resides in paragraph 11 of AS 1210. The new requirements provide a principles-based framework for reviewing and evaluating the work of the specialist. Under the new requirements, the engagement partner and, as applicable, other engagement team members performing supervisory activities should review the specialist's report or equivalent documentation describing the work performed, the results of the work, and the findings or conclusions reached by the specialist as provided for under the requirement for establishing and documenting the understanding with the specialist. If the auditor-engaged specialist has a relationship that affects the specialist's objectivity, additional procedures are required. The necessary extent of the procedures depends on the degree of objectivity. As we discussed earlier, auditors may identify this relationship when doing the initial assessment of objectivity as part of selecting the specialist and would plan their procedures accordingly based on that. Regardless of the extent of review necessary, the auditor's review will include considering whether the specialist's findings or conclusions appear to contradict the relevant assertion or whether the specialist's work doesn't provide sufficient appropriate audit evidence. In that event, additional procedures, whether by the engagement team or the specialist, would be necessary. The standard includes examples of situations where additional procedures ordinarily are necessary. Those examples include the work was not performed in accordance with the auditor's instructions, the report or equivalent documentation contain restrictions, disclaimers, or limitations that affect the auditor's use of the work or report or work, the specialist's findings and conclusions are inconsistent with 1. The results of the work performed by the specialist, 2. Other evidence obtained by the auditor, or 3. The auditor's understanding of the company and its environment. If a specialist lacks a reasonable basis for data or significant assumptions the specialist used, or the methods used by the specialist were not appropriate. The auditor uses his or her judgments when determining what those additional procedures would be and the extent of work necessary to achieve the objective. If the specialist's findings or conclusions appear to contradict the relevant assertion, or the specialist's work does not provide sufficient appropriate evidence, Auditors should perform additional procedures to address the matter or request the specialist to perform additional procedures. Similar to AS 1105 paragraph 29, the new requirements don't prescribe specific procedures, as these will be determined based on the facts and circumstances. And with that, I'm going to turn it back over to Lisa.
Thanks, Nick. Now let's talk about the resources the PCAOB has available for you. First, I encourage you to visit the Specialist Implementation page. Here you can find a number of resources, including the adopting release. You'll also find the staff guidance that the PCAOB published in August of 2019. These two documents highlight information for auditors as they begin to plan and perform work on audits to which the new requirements for using the work of specialists apply. They illustrate relevant considerations for auditors, including certain information from the adopting release. We do plan to continue updating this implementation page as additional resources are developed. This slide provides the ways you can stay current with the standard setting activities and contact the PCAOB with questions about our standards. Now I'd like to thank you for watching this presentation. Have a great day.